everyone, this is a trader investor, and in this video I'm going to go over the broader markets starting with SPY. SPY. So yesterday was a pretty interesting day, meaning that initially I didn't see any trade setup, and towards the latter half of the day, past 10 o'clock Pacific time, 1 p.m. Eastern time, after lunch, I saw a little bit of weakness, but because it was near the 15-minute range high and mid of the previous day, I did not want to take any position in that downside to the put side. I did not want to be in a hurry to enter a position to close this imbalance, There is a couple of days of gaps left, so I did not take that position. However, as price closed above VWAP, then I took a position on the call side. Yes, we did not break the high of the 15-minute range when I entered, but it appeared that it gave us a bottom, and that was an entry. Now, I exited at the end of the day because I felt like SPYs are extended. I still do feel that way, and we can see that today because of that. Because SPYs are really extended, what we see is price did gap up, yes, but it's trading in a tight range. If we look at the daily for today compared to yesterday, if you look down here at the range, yesterday's range $1.76, today's range 69 cents. So that tells me that, you know, I should not rush to enter call positions and put positions. If the setup is right, what I want to do on the put position side is target this imbalance. If I'm going to target that, I am going to look at the hourly chart, look for the proper reversal signal to target this as a swing position. But as a day trade position, looking at the 15 minutes, if we break the low of the 15-minute range, it's already 8:30 a.m. Pacific time, and we're still in that tight range. So if we break the low, the high of yesterday, the close of yesterday, the high of last week are in the way of us getting to the low of yesterday and the imbalance left from last week Thursday and Friday. This is the Thursday imbalance, this is the Friday imbalance. So because we have that, again, I will not rush, but as we look at different signals, you can look at any oscillator that you have. As price is making higher high, our oscillator is not making a higher high. That's why I want to switch to the hourly. As the oscillator is getting weak, you can use MACD, RSI, stochastics. This is the one I designed myself. But whatever you use, as soon as you see weakness, maybe a close below today's first hour of trading, maybe if we see a close below that, then it might be a sign that we're going to start heading down. Again, if I use this, it's because I'm seeing divergence in the oscillator. Price is making higher high. And the oscillator is struggling to make even equal highs. As you can see, there's a gap there. So if we take it from this angle, it's heading down. So this is what I'm seeing. Now, of course, we're not going to rush to enter until we see weakness, because what could happen, and I'll remove these drawings so that it's easier to see. What could happen is we could see the oscillator come back and reclaim the high if price continues to push up, right? Because that is a possibility, we do not want to rush to enter positions, right? So that's what I'm trying to say. But on the 15-minute range, again, when I break the 15-minute range, I usually take this position, especially if I don't see anything that is preventing me from going higher. We're at all-time highs. Nothing is preventing us from going higher. However, because we're extended, because the hourly is showing us weakness, even if you look at the 15-minute oscillator, we're making lower high, even though since last Thursday price has kept pushing up. Price has kept closing higher, closing higher, closing higher, and still higher, but the oscillator is showing some weakness, even on the 15-minute chart, right? It's that's why I feel like the market is extended. It wants to do a correction. A correction doesn't mean a collapse. A correction means it just maybe wants to close these gaps and then back to the moon, right? I mean, in SPY, the moon, I just say that very lightly, but you know, keep continuing to push for all-time highs, but we could see a pullback. So if a pullback is possible, then we are not in a rush to enter call positions. The call position that I closed yesterday, if I had held, would it have made more money? Absolutely. But not knowing that, I had an 80% gain. I didn't want to give that back. So that's how I'm looking at my daily, day in and out positions. If I'm swinging it, I'm looking again, as I showed you earlier, at the hourly chart, looking at break of structure to show me there's some weakness to take us back down, at least for a little bit. Looking at the Qs, yesterday Qs were the strongest. I mean, right out the gate, pushing up and staying above the 15-minute range high almost the whole day, right? Price just kept pushing up and up and up. And today, it almost feels like an inside day. Yes, we broke the high of yesterday slightly, but it's an inside day. And looking at the range of today, looking down here, range of yesterday, 313, range of today, $1.50. So half the size. Even the range is half the size. Why do we want to focus on that? Well, is this tradable or not? When the range is really small, the markets are just absorbing the gains from the previous day, some profit taking, some consolidation, just waiting to see what happens. Once that is taken care of, then we can go back and look at possibilities for the call side, put side, whichever side presents itself to us. But for now, strong yesterday, just mellowing out today. IWM weak yesterday, very weak yesterday. And when IWM is weak, that's another reason why I feel SPY is extended and I'm not rushing on the call side. So weak yesterday, and today is an inside day. Definitely an inside day. We're above the close from yesterday, that's why it's a positive day, but we're still below the high of yesterday. So an inside day, I don't like day trading inside days. They don't give me enough signals, they don't give me enough room to the upside. Is there a dollar from the 50-minute range high to the high of yesterday? Maybe there is. 231.70, 232, about 70, you can say about $1, but for me that just doesn't give me the comfort that I need. And to the low side, part of my problem to the low side is if we break this close of yesterday, retest maybe the 50-minute range low and start to get back down, swing point here is area of trouble for me, and the next one is here. Yes, if we go for the low of yesterday, from some entry here to the low of yesterday is $1.67. However, if we are going from some entry, let's say some entry here to here, this is not $1 for me. So what I need to see then is, if we clear some of these drawings, I need to see price take this out, maybe retest this high, and then I can go for that dollar move. But seeing that it's an inside day, playing around in the 15-minute range, high low, I am not anticipating anything major to happen today to change that. And finally, taking a look at the diamonds. The diamonds, almost an inside day as well, not almost, out exactly an inside day. If we consider this high of yesterday and the high of last week to be close enough, it's an inside day. Otherwise, we broke slightly out of it, but we're staying above. Again, another very, very small range day. We can take a look at the range again by looking at the range value here. Yesterday 260, today 120, right? Less than half. So when I start to see this is a sign that the markets are just taking a breather and consolidating. And in that consolidation, I'm just patiently waiting to see direction. Once we have direction set, maybe we look at hourlies and we see some structure broken. Maybe we break these lows, then I can start targeting some imbalance left a while ago. If we consider those imbalances already closed, then we can ignore that. But we're just patiently waiting to see what the market is going to do. Where is the market going? As you see, this imbalance from a long time ago, this gap here, I am leaving it because it's not fully closed, but for all intensive purposes, halfway closed, this imbalance is taken care of. I am not concerned about this imbalance. There are a few more that I have not drawn, but when I see a gap, that's definitely an imbalance. There are other ways to look at imbalances. We can definitely take a look at those as well. And as you can see, there's an imbalance right here. There is an imbalance from this to about here. So price just kept going up, never came back down. So there's this imbalance that it could come after. There's this gap that it could come after. This gap is already taken care of. So there's a lot of ways to look at these long term, but looking at short term, almost an inside day, small range in all 4 of our ETFs, no rush to enter trades. So this is how I'm looking at the markets for today, and I will come back and see what the rest of the day looks like. If there's anything interesting, I'll make another video later on today. And however, whether we have another video today or tomorrow, I'll definitely see you in the next one. All right, everyone, take care.